Hi everyone, I'm Ken Calhoun from TradeMastery.com. This channel is dedicated to helping you become a more successful, focused, active trader, because you and I both know trading's tougher than it looks. So let's focus on helping take your trading to the next level. Coming right up. With our S&P in decline as of today, April 15th, 2017, the broad markets have been selling off the last couple of weeks. So I am trading the inverse ETFs like UVXY and VXX. I'm also trading gold instruments like GDX and also oil sector instruments, all of which are on the incline or going up. See, money needs to find a home. If it comes out of the stock market, it typically goes into commodities like oil and gold, and the inverse ETFs, also worth trading. So something to pay attention to the upcoming week ahead. We will start with our Q&A session. See a question from Thomas: how do you scan for good charts to trade in the first place? I have a hard time finding good entries. Well, a lot of it is looking at leaderboard scans. So the easiest way that I find, at least in my own trades, is looking at the percent change leaderboard scan. And I look at both the percent gainers in the NASDAQ and the New York Stock Exchange to see who is hot lately, right? Like this AXON chart I just found this morning. That's a very easy way to scan. I look for things that fit my criteria, you know, $15 or $20 up to $40, $50. On rare occasion as high as $70, but usually $15, $20, $30, $40 a share range is what I like to swing trade or day trade. And so we've got these types of charts that pop up on your leaderboard scan. So look at both the New York Stock Exchange and your NASDAQ and see who's hot and what kind of volume and volatility those charts have and which ones really make sense to trade. I prefer things myself that are taking out new highs. So in the example of this AOXN chart, much smarter to buy strength than to buy weakness on a bounce. That's a huge directional shift. So that's a good question, and one good strategy that I think can really help you as a trader is focus on the upper right side of your chart. That's where I play. That's where I make most of my trades, is buying strength at the upper right side of the chart. Get away from the department store it's on sale mentality where something's dropped precipitously and is starting to bounce and you get in on the trade and think it's going to run up, because usually that ends badly. Speaking from my own experience at least. I mean, you may have better luck than me, but I found that buying strength and then selling, you buy high, sell higher, is much smarter than trying to buy low and sell on a bounce, because usually buy low will go up a little bit and then stop you out. It's much better odds to trade in the upper right side of the chart. So good question. Thanks. Question about a stop loss using an average true range. That's one strategy. I look at previous day's trading range, the high low, and use that as a price projection for the current day, and then make trading decisions based on price elasticity if it takes out new highs or new lows. So that's a smart question, and there's so many charts out there. What you look for as a trader is exceptional volume and exceptional volatility. As professional swing and intraday traders, we are volatility hunters, kind of like Indiana Jones or Lara Croft out there looking for a treasure. We're looking for exceptional volatility and exceptional strength. And as a trader, one of the things that can really make a difference in your own trades is to look for outlier charts, which are usually gaps or exceptionally strong ATRs, average true ranges, that are larger on higher volume than the previous day's trading range. Say a question from TJ: when price hesitates at a resistance or support level, how do you determine which way it will go? Well, I just make a trading, and that's a good question. If we're at prior support or prior resistance, you know, how do we tell which way it's going to go? I let the price tell me in terms of things like this Momo chart, right? We're at R1, here's another resistance trigger. Here we've got a large green candle at the right side of the chart, and it led to new buyers, but there's a shooting star up here, right? So with a series of bearish upper shadows, two shooting stars, that says definitely don't play with fire. I'm going to wait till it gets over 40 before I get in Momo myself. But to answer the question, you don't predict what's going to happen. You just react And what I react to is the signal strength of professional traders and the hedge fund guys where you have large green candle signals at the right side of a congestion box or right side of a bullish cup.
And that does it for another episode of Trade Mastery's Trading Video Vlog. Until next time, be sure to post your comments or questions below, subscribe to the channel, and I'll see you in our next episode. Until then, trade with passion, trade with little tiny stops, and trade to make as much money as you can. Best wishes for successful active trading.